let's move on to one of the major global market stories at the moment. That's the turmoil in Turkey, which is continuing. Emerging markets sliding on economic woes from the country. The euro struggled overnight, hitting a new 13-month low as investors continue to worry about contagion. It comes as the nation's first steps to bolster the financial system were seen by some as insufficient to protect markets. Now this as the president lashed out at the United States, taking higher rates off the table and saying he wouldn't accept an international bailout. We also saw our local unit, the Aussie dollar, tumbling to 18-month lows. You're seeing a big push higher in the US dollar, which really is only exaggerating some of the issues being felt by Turkey and some broader emerging markets. Well, let's get a little bit more analysis on it. Jack Lowenstein, Managing Director and Joint Chief Investment Officer at Morphic Asset Management, joins us now from our Sydney CBD studio. Jack, appreciate your time today. What to make of Turkey? In particular, how much of it is actually self-imposed, self-induced by the president?
Look, it takes a special genius to turn a problem into a crisis, and I think Erdogan, the president, has really done that. The problems in Turkey have been evident for a long time, but he has just basically added petrol on the fire to the point where he couldn't do it anymore. And then when the obvious solution was to raise interest rates, he took away central bank independence, and hence we have the problem we have today.
And this seems to be the problem. I mean, you had the finance minister around about this time yesterday talking, and which happens to be his son-in-law, talking about a plan that they're going to put in place. But it's hard to see how you stabilise the currency without lifting interest rates. And that seems to be a big bugbear of the president, who's described higher interest rates as both the mother and the father of evil.
Yes, well, you know, Erdogan's got some very strange views. He believes that higher interest rates are the cause of inflation, whereas most conventional economists would say that you actually cure inflation by having a sharp rise in interest rates and squeezing the system dry. Now, obviously, the effect of that is to cause tremendous problems for economic growth, and Erdogan has pursued a growth at all cost strategy in Turkey for many years, and really it's coming home to hit him. It's particularly foolish because the nature of the Turkish banking system is particularly fragile in that, unlike most banks, most countries, the banks there lend a large amount to companies in foreign currencies, and now they can't refinance their own liabilities, so the banks could well be wiped out.
Well, this is the worry, isn't it, as well, and what sort of exposures European banks have to the issues in Turkey, which, you know, is reliant on global capital, and you have that lira just plummeting. The ability to repay it becomes that much harder. You've had the president as well coming out urging his people to sell anything that's US dollar denominated to try and offset a little bit. I mean, it's just crazy.
Look, I think you've said it. It is just crazy. And just to cover the point you raise about European banks, there are about 4 banks in Europe that have a substantial exposure to Turkey. Only one of them is really large, and that's a Spanish bank called BBVA. And even for them, it's, you know, worst case, I suspect it will wipe out a year's profits, maybe a year and a half's profits. So it's a big problem for them, but it's not life-threatening. And the other banks, BNP, Unicredit in Italy, these are not going to get wiped out by this incident. So I think it can be very much contained. And obviously what happens at times like this is that people search around for lookalikes, which other country is next and so on. I don't think it's like the Asian financial crisis of 1997, which I remember rather vividly. This time around, there aren't many other countries with the unique set of problems that Turkey has, and a uniquely crazy way of trying to deal with it.
It's an interesting point because you see overnight a big fall in other sort of EM currencies. You throw in South Africa, Argentina, a couple of others. Their issues not quite to the extent of Turkey.
I think South Africa is probably the most worrying in the sense that you've got you need economic problems plus a crazy guy on top. And in South Africa, you know, there's been rumours, or well, not rumours, there's been more than rumours. There are now plans to allow the expropriation of white farmers, who are really the backbone of the agricultural economy in South Africa, with no compensation, rather like what happened in Zimbabwe. And they've been left untouched since the abolition of apartheid. But if that happens, I think you could see another downturn in the South African economy. But as yet, I don't think there's any substantial, you know, it's just rumour rather than, or threat rather than action. And And I think what was very interesting, the Philippines, which is, if you look at countries that have got slightly unusual leaders in developing markets, the Philippines is another example. But there, the central bank governor still has independence, and he had a very stirring sort of whatever it takes kind of speech, saying he will raise interest rates to protect or to squeeze out inflation and protect the currency. So at this stage, I don't see a lot of contagion effects, either in Europe or in other emerging markets economies.
Is there then the possibility of opportunity if you were to see some of the sort of alarmist market moves impact some of those stocks or markets that really shouldn't be negatively impacted? Does that create the opportunity?
Yes, I think it has. I mean, during the course of the day, we've seen quite a sharp turnaround, for example, in Japan, which started off the day down, is now up quite strongly. We've used the last few days to cover some of our shorts in Japan, and we've also been buying stocks in India, where the Indian central bank is a very well-run central bank. They are raising interest rates because they're worried about inflation. To put it in context, inflation in India is comparatively low by historical standards, but they want to be ahead of the game. So we're taking advantage of this momentary panic across the EM space to try and buy selected stocks.
Where's the opportunity in India?
Well, our view is the opportunity in India is on a sort of 5-yearly cycle. At this time of the year, or sort of the point in the electoral cycle, which is just before the elections next year, you want to be buying things like exposure to corporate lenders. So both bank and non-bank lenders. You want to be buying infrastructure plays and so on, and that's what we're doing at the moment.
And as far as Japan goes, I wasn't aware that you were short parts of the Japanese market. How's that been going?
Well, look, we've been shorting a couple of what we call second-rate property developers, and they have one of them in particular had very bad results last week. So it fell sharply. It's down about 15% since its results came out. So we've been covering that short. It's just selected areas where the combination of a bad result plus overall market weakness has seen these things plunge further than we expected, so we're just covering our positions there.
Is it a tough environment to find good, conviction short plays at the moment? And I know you take a global approach. A lot of people talk about it having to be very brave in this sort of environment to take big short positions.
Well, you always have to be very brave to take big short positions. We've got a few. Our short position on Coca-Cola Amatil has been well publicised, and I saw that one of our another small fund managers also opened a short position there. We think that's one that can, well, not run and run, but fall and fall. There's a few others that we have, but overall, at the moment, I think this week at least, it's an opportunity to do a bit of bottom fishing.
And just finally, and to put you on the spot question without notice, Jack, I don't know if you are, but have you been tempted to run the cursory short glance over Tesla?
Look, we have not shorted Tesla in the last year or so. We had a brief look at it a few years back and decided that it was just too hard. I know that one or two hedge funds here have rather blown themselves up through shorting that stock. Our view is that shorting hope is very dangerous. And of course, now with the Saudis having basically said they want to participate in taking it private, I think it's a very dangerous short indeed.
Yeah, absolutely. Jack, great as always to get your thoughts. Thank you.
Thanks, James.
Jack Lowenstein there from Morphic Asset Management.